Welcome to Now Stock Trades. We're going to be starting this live a little early. My apologies for my background. We're currently working on our YouTube studio as we just moved from Minnesota down to Arizona. And there's a lot of new things in our studio that we're trying to build, but unfortunately, a lot of stuff are held back in China right now, such as the computer for editing. So we're using this portable setup. So in this video, we're going to be finding the intrinsic value of the DraftKings stock, DKNG. Now, I've been looking at the stock for quite some time, especially when it came public in the markets during the fusion frenzy of a stock market that we had that was propped up by the Federal Reserve. Hello, hello. How you doing, Sean Taylor? Hello, hello. Good morning. Good morning. Slash afternoon, almost actually afternoon now. So these are first off. Let me just make it short, really quickly for people that just want to get in and get out. We're going to be giving a price target, and we're going to be using our proprietary intrinsic value calculation from our Mastering Stock Market course, which you can find the link down below. Just a quick shout out to our program. We have been featured on Bloomberg, MarketWatch, NASDAQ, Benzinga, Yahoo Finance, Yahoo Money. Our platform is growing. I'm very excited about that. But shifting gears right now. So states have racked up a hefty bill, and now they're just trying to find ways to raise money. Now, they could go ahead and tax citizens, which honestly, that's not a good idea because, again, we already know the government is not an allocator of money. So where are they going to turn to? A lot of states have turned into marijuana and gambling. And this company here is obviously set to take ownership of this market share. However, they don't necessarily have a moat, which can easily be overtaken. Now it's just about that brand power. So they just released their quarterly earnings, and they had a monthly unique payers increased by 2 million. Their company raised guidance for 2022 to approximately $2 billion, which is an approximate year-over-year growth of 49 to 56%. Okay, so we're going to be using these numbers along with these numbers here to calculate the intrinsic value of the stock. Now, very quickly, just to go over these numbers really quickly, DraftKings started off really strong. Their gross margins were extremely handsome. However, as soon, maybe it's because they started growing, expanding, I don't know, but their gross margins are decreasing. And, I believe that this company needs to increase these margins in order to see some good movement in the stock price. Also, the operating margins is going negative on the downside because if you look at the net income, they are losing a lot of money. I mean, they are literally burning through cash. And this is the risk of investing into this company. The outlooks look great. The revenue looks great. But there are other underlying factors that raises red flags on the balance sheet. Furthermore, if you look at the shares, they did dilute shareholders during this time to raise capital, as in a recession is definitely indicated. Furthermore, if you look at the free cash flow, it's also negative as well. So we're going to be doing these things and calculating them to find the intrinsic value. Now, if you look at the financial health of the company, they're pretty stable. They have enough money to satisfy their short-term debt obligations. So we're going to go ahead, put it in, and we're going to find the value of the stock. So we already talked about how 2022, they estimated that they're going to get approximately $2 billion. And again, these numbers are in millions. In 2017, they had $192 million, which shows us that they've been growing at approximately 60% year over year. Oh, yeah, thank you for reminding me. Yeah, if you guys can smash that like button, that's really helpful. Thank you so much. I'm so focused on the analysis that I just forget about the whole YouTube side. Spelled finance wrong. All right, so let's go ahead and show us the analyst revenue estimates that they think that's going to grow. And if you look up analysis here, you can see that they're thinking of growing around 52.5%. Now, based on their numbers, we're having them grow at 60%. Now, we can adjust it after, but so far we're going to be doing this. Now, again, this is somewhat of a software. That's what it is. So we could generate a higher estimated free cash flow, but what we're going to be doing is we're going to use 5%, which is the bare bones. So we're going to use 5% as the estimated free cash flow. And we're going to put the revenues that they've been making ever since. So this is for 2017, 2018, 2019, 2020, 2021, and then now 2022. They estimated, remember, that they're going to make 2 billion. In 2021, they made 1.2 billion. Then in 2019, they made 323 million. 218, sorry, 2000 and 2020 they made 615 million. 2019 they made 323 million. In 2018 they made 226, and then 2017 192. Again, if you guys, this can get a little complicated, but just bear with me here. So all we're going to do is we're going to multiply this to get the estimated free cash flow, then run the analysis as such, and these are the numbers. So now we're going to take these numbers and input them into it doesn't matter what year, it just takes the average. By doing this, we just update the intrinsic value calculator, which goes 10 years into the future and discounts back at a 10 to 15% discount rate using a 2% perpetuity model, which yields us the outstanding shares once you divide them out, which then will lead you the price target of the stock. And again, this is a fundamental way of investing. This is not like gambling. Oh, things are going to work out. This kind of basically tells you where is the ballpark price target, the value of the stock. So the shares, like we stated, is 402. On average right now, the stock price should hover anywhere between $29 as the bear case to $41 as the base case and $64 as the bull case, okay? So because we're going to be a little bit more conservative, what we can do is we can take the analysis of 52.5 and just insert it here. And we could drop down the price targets just to be a little bit more safe. And I would say as of right now, again, we could be most definitely headed into a recession. Consumer spending will definitely take a hit. Now, they did talk about on their earnings report that inflationary pressures is not bothering DraftKings, but how long will that last in order, until it does, right? So that's something that we need to take account of. So if I was to assign a price target, because it's in a again, it can go up to $40, $50, right? We saw how when we looked at it with around 60% revenue growth based off of its numbers. But based off of these, I would say I would assign a price target right now of $20 for the stock, which if you look at the current share price of $13.09, that is a 52% gain, which is amazing, right? Now, switching gears, we have a proprietary brain machine that we created specifically for our private Discord. It's leading edge in market analysis. We do offer a 3-day free trial for members if you want to try it out. It gives you price targets. We have been featured on these news outlets. Our results speak for themselves, and this is what's inside. If you want more information, there'll be a link down below. So if you want to take a look at, let's say, the price targets that analysts put on the stock, what you can do is you can just get an average DKNG, and what you can see is the target high is 105, the target low is 19, and the consensus is 57. So Wall Street's pretty bullish on the stock. But now going to specific analysts to see which analysts did these price targets. You can see here, and this is directly from our Discord, you can see that Needham, which is a highly respectful place. I actually know a couple of the analysts there, very smart people. Their price target here is $32. We have Wells Fargo, 19, so a little under mine, a little over mine on here. So my price target's $20 for right now. As you know, I'm obviously undervaluing this. I'm a bit more conservative. Citigroup is 40. Oppenheimer here is 32. And so people are definitely bullish on the stock. Now, if you look at our own DCF here, which does beta, which basically tracks short-term changes within the market, you can look at DKNG, you can see that the stock price here is at $13. However, our intrinsic value calculator with inside of this, it says it's $18.36. So based off of these, you're looking at a 41% based off of this transaction here. And again, this is all part of our Discord. This is Brain Machine. It's our very own leading edge market analysis, which utilize machine learning algorithms. This price target will consistently change based off of the beta of the stock market, which it basically uses to calculate the value of a stock. You can calculate any stock value you want. That's the power of our private Discord channel. We pretty much turned it into a software, and it's which is why we're able to charge $10 a month, which is incredibly cheap for everything that we offer. Now, let's just take a quick diversion and look at technical analysis really quickly here for the DraftKings stock. Now, if you go here, if you look at the minute chart, and then you switch gears and you take a look at the hour chart as well as the day chart. I'll come in and load here. Let's look at the minute chart here. You can see that it broke broke this level of support here at $13.25. If the stock ends up rising, 14.96, 15.74, and 16.48 are the next levels of resistance. Now, if you go ahead and take a look at the hour chart, you can see the same thing, unfortunately, but as well as the day. So from a technical perspective, this stock could continue to keep going. And from what it looks like, there isn't just enough sufficient data to calculate the next level of support. We may have to go to our next level here. Yeah, so there, in terms of the analysis of the support and resistance, it seems that we may have to go in and take a look at we may have to look at the Fibonacci for the chart to see if we might have some data. So by looking at this, and this graphs it pretty well. Yeah, so we're literally so this is what happens when you get a stock that has been falling to a level that it hasn't fallen before. If the recession does happen, this could end up being a falling knife like any other stock, even though the revenue is growing really well. The problem is, just like with Amazon dropping 90% of its value, this company was doing well, but the stock was doing terrible. And sometimes you have to basically parcelate that and split it and say, okay, well, this is the stock market. The stock market's not doing, it's having a panic attack right now, but the company is doing well. And you're going to have to be disciplined enough to understand the fundamentals to guide you through this analysis. Now, very quickly, just to shift gears really quickly here. Here's a smart money, dumb money confidence spread. We are seeing some dumb money come back. Dumb money has sold a lot. Again, these are retail investors. These are institutional investors. If you look at the fear greed model, we're at extreme fear right now. And usually this is a good contrarian indicator. Now, this is the 2020 pandemic. We could have a bit of ways to drop. If you look at the bear market probability, which is used by Goldman Sachs, which basically takes into account the U.S. unemployment rate, ISM manufacturing index, yield curve inflation rate, and the PE ratio, the higher the score, the higher probability of a bear market's in months ahead. And as you can see, I'm analyzing this because every time if we do get a slump, it's a somewhat of a good indicator that, hey, we may be entering a recession, which is good because it resets this whole cycle. Then the Feds can come in and do their whole thing and reprint and essentially with their fiat controlled currency. Now, based off of these connections here, this next data set uses high-end algorithms, which are the same matrix coded for hedge funds that they use to manipulate the markets. Based off of these tactical composite trends, we are seeing that we are still in a bullish signal. We did get a risk warning model a couple weeks ago, which started accelerating this downtrend. However, all the long-term model still remains bullish with a positive return of the S&P 500 at 11.3%. Now, though, if you analyze the trend, which takes day by day slope, which is, if you don't remember, M equals Y2 minus Y1 over X2 minus X1 here, and it calculates this slope, we are seeing that we may be headed towards a downtrend, and this bullish positive signal may turn bearish, leading into a recession. But based off of the recession indicator right now, and these are we have institutional access to a lot of these data sets to help us perform adequate analysis of the stock market. But based off of these indicators, this may be a correction and not a recession. And a recession may be prolonged depending on how the Feds act. The Feds are stuck between a rock and a hard place. So we'll see. So if you like our analysis and you want access to all of our softwares, we do offer a 3-day free trial. We've been featured on Bloomberg, MarketWatch, NASDAQ, Benzinga, Yahoo Finance, Yahoo Money, and many other major news outlets regarding our software and our proprietary analyzation tools that analyze the markets. And these are everything that you guys need to know about what we include, and all our price targets, our daily short squeeze stocks, and everything else that we offer. So it is a privilege and honor. And I think that's it for you guys here. And that's all I have for you. Let's look at some questions here. How will Golden Nugget help? I have to do an expanded analysis on that. I'm just looking at the fundamentals right now based off of the numbers. I would have to go into a little bit more details of all the projects that they have. But based off of the numbers right now, it is looking pretty good. The problem is their cash burn needs to be fixed, which will ultimately help with their gross margins and operating margins. One thing, though, I did leave out, Moomoo is having a great deal. I recommend you coming in and signing up for the Moomoo stock. You get 5 free stocks. Now, if you only deposit 1 penny, just open up an account. You only get 1 free stock. If you deposit $100, you get another one, which is 2. Now, if you deposit $2,000, you get a 3, which then equals you 5 free stocks valued up to $15,000. This is like literally free money, but I actually also use it as well. They have free level 2 data as well as short selling data that's free as well, with a whole slew of resources that Webull or let's say Robinhood don't offer without a price. So take advantage of this. It's a great platform. Thank you for Moomoo for sponsoring this video. And yeah, I'm very honored and privileged to be able to provide you guys this information. And that's all I have for you today. I'll see you guys on the next one.